98% of traders never get a prop firm payout. If you've never gotten a payout, in this video, I'm going to show you the exact roadmap to get your first payout with only $65. First, I will convince you why you should start small and why most traders can't even get a payout if someone gave them a challenge account. There's something very important that most traders overlook or don't even know about that is holding them back. Second, I will show you the roadmap that I took last year, starting with $49 and eventually using payouts from smaller accounts to buy bigger accounts, and eventually purchased a 300K account and got funded with it. Third, I will show you a trading strategy that I would use if I was starting all the way over from the beginning. Now, you don't have to use this exact strategy, but you'll want to see it so that you can get some ideas for your journey this year. To start this video off, I want to show you what's possible with skill and starting off small. Last year, at the beginning of 2023, to demonstrate to my students who have now surpassed 250K in payouts, I did a 5K challenge and made 19% in profits on it. I walked away with enough to buy a 200K account, 100K accounts, or 3 to 4 50K accounts. I then purchased a 50K account and proceeded to get payouts on it, and then purchased a 300K account and got funded with it and took a payout. But let's rewind to the 5K account. This is what I want you to focus on in this video, because once you acquire what I'm going to share with you in this video, you'll be able to potentially get payouts on any account size. Now that takes us right into point number one. Why start small? Why is it hard for traders to just get one payout? Why do only 2% of traders get a payout? Share this with someone that needs to hear it, because I'm going to drop a bomb right now. Most traders have been misled into believing that their problem is psychology. Most traders hear influencers say trading is 80% psychology. Most traders hear influencers say all strategies work. This is completely false. Psychology is important, but I would argue that the majority of Forex traders are trading strategies that have no edge in the long term. Most are unaware of what edge is and why they can pass phase 1 but can't pass phase 2, or they pass phase 2 but don't seem to ever get a payout. If we took out all of the psychology problems away, most traders will still fail because they either don't know what edge is, haven't clearly identified when their strategies have the most edge, or the strategy itself has zero edge. I'll explain what edge is in a minute, but here's a statement from a verified 8-figure trader about edge versus psychology. This is a tweet from Lance Brightstein, who I'll have on the podcast pretty soon. He says, "My number one FinTwit observation is most failing traders wrongly attribute their struggle to issues of psychology and risk management. Reality is most have zero edge. They are naively fooled by randomness into thinking their wins are edge. This seduces them to troubleshoot the wrong problem." He knows many successful traders that have huge strategy edge, poor psychology, and risk management. Yet, the best psychology and risk management but no strategy edge equals 0% chance of success. So now, what is edge? Again, pay close attention to this, because once you start to hyper focus on this, you'll have a much better chance at being successful in this industry. Let's ask ChatGPT. What is a Forex trading strategy with edge or positive expected value? ChatGPT says a Forex trading strategy with an edge or positive expected value is one that is statistically expected to earn more than it loses over a series of trades. The edge refers to the trader's ability to consistently make profits over time. This edge can be derived from various techniques such as technical analysis, fundamental analysis, or specific trade management rules. Now, the next time you are doing a YouTube search about an ICT strategy, SMC strategy, scalping strategy, supply and demand strategy, etc., and you see a 75% win rate, 90% win rate, the real question is, does this strategy have an edge? How long will it have an edge? What are the conditions for this strategy having edge? And the reason I recommend that you start small if you've never gotten a payout is because you need time to obsess over this question. What is my current strategy's edge? Now, I believe personally that simulated prop trading is one of the most favorable types of trading because it is a great learning ground. Why? Because even some of the traders with the highest amount of payouts have lost accounts and have had the benefit of starting over. You can't do this in real life with real funds. I would argue with any trader out there that this is a benefit, but also has caused a blind blind spot for even some of the most successful simulated prop firm traders. They found out how to have an edge at least 50% of the time, or for certain parts of the month or quarter. But if they were trading live accounts, they'd have to stare the question of edge in the face because they couldn't just reset. That's a different conversation altogether, and the video about the edge in detail will come later. Drop a fire sign in the comments if you want me to do a video on edge. Regarding that, here's another tweet from Lance. He was asked, is Forex any good to trade? He said, in my opinion, Forex is one of the most efficient markets in the world, way more so than futures. Yes, a few succeed, but odds are very stacked against you. Only people making easy money from the Forex craze are the Furu marketers. Sorry, Miami. I'll have Lance on the podcast coming up soon. Be sure to subscribe and drop some questions to me in the comment section for Lance. Long story short, you need to obsess about edge. This leads me to the second point, which is the roadmap. With the proper skill, you can take $65 to purchase a small 6K account with My Funded FX or the Funded Trader. Get just a 4 to 5% payout on that account, which is $300, and your refund back. That is a 461% return. Last January, I actually did this with MFF. I paid $49 for a 5K account, and I got $950 in payouts on that account alone while running it on a trade copier to my other accounts. That is a 1,838% return. If you look at the relatively small numbers, you will forget that once you can do this on a smaller account, you'll eventually be able to do so on a larger account. But you shouldn't spend too much time of your hard-earned money while developing your edge. So if you've never received the payout, do the following. Look at the 4 pillars: playbook with edge, risk management, psychology, and execution. Firstly, obsess over your edge. Ask yourself the following questions. Does my strategy have an edge over a long period of time? Prove it. Prove it to yourself. Don't only ask the question. Prove it through reviewing your data or back testing. Next, work out when it has edge. The time of the day, the best market conditions, the best symbols that you can trade that strategy on, and it has more edge. In my opinion, this is the most important work in the beginning, because without a strategic edge, mathematically, you will not be able to be profitable. Next, you paper trade your strategy in the demo or free trial. Many companies have a free trial. Beat at least one free trial or a few. Collect your stats and work out what your risk needs to be in the live challenge, how much drawdown you normally get into, how many trades you take per month, etc. Your win rate and average R&R. I know this seems like a lot, but the top traders that I know that have withdrawn over 500K have all been trading on average for around 5 years or more. These things take time, unlike a lot of what the influencers promise. Now, lastly, I would then recommend starting with a small account. Visit a website like propfirmjournal.com, which shows you which companies have a small account. Trust me, I know you want to make big money, but if you can't get a payout on a small account, you won't get one on a large account. I don't want to hear about needing a bigger account for more drawdown, because percentages are the most important thing at play here. Now, you may ask, what should you do after you get the first payout on the smaller account? I would recommend rinsing and repeating. Don't quit your job or spend that money on something else. Take the profits and reinvest them into a set of larger accounts. Continue to trade that small account and use the payout money from there to get more accounts. After you get the first payout, you can introduce a trade copier for cheap. Once the 50K is funded and you get a payout, take a conservative payout and then take that money and reinvest it into more challenges. Now from here, you may decide to jump to a higher account size, because you have that smaller funded account. Now you have the 50K funded account, and now you can go for larger gains that you have your first payout and your refund. And you can consider at this point, you could also switch to the ROI approach, where you trade challenges more aggressively with the approach of getting funded faster. So instead of purchasing 100K account, you purchase 4 25K accounts, and you use higher risk to get to the funded stage. This takes more discipline, and you have to be sure that you are taking only high quality setups if you go this route. Whichever route you choose from here, you can rinse and repeat all the way until you get up to the largest account that firms provide, between the 300 and 600K max allocation with different firms. Again, if you focus on the 4 pillars and obsess about edge advantage in the beginning, you'll eventually find it and be able to duplicate the success that you had on the small account with a larger account. Lastly, let me tell you a small story about my first funded account. It went into negative 9% drawdown. I passed phase 1 almost flawlessly, passed phase 2 almost flawlessly, and then when I got the funded account, I took a huge losing streak. I discovered two things. I didn't have a playbook and couldn't read the situation, current market conditions correctly. During phase 1 and phase 2, SPX 500 was on a downtrend, and I was strong at trading the supply with the trend. When I got funded, SPX 500 went into a 2-week range. I kept getting chopped up. Why? Because I had no playbook setups for the range and I couldn't read the situation fast enough. I didn't even understand how to identify that I was in the range or why we'd be ranging. Now, I've grown to understand that indices are heavily impacted by fundamentals, rates and earnings mainly, and sometimes bonds. Now, I've developed a strategy with indices that consists of 2 steps. First step is understanding the overall fundamental bias. Am I bullish, bearish, or neutral? Next step is structuring an entry. Some of the entry models are break and retest models, supply and demand models, and some of them require momentum entries due to the market being very bullish or bearish. It all depends. Now, I don't have an edge with indices all the time. My A setup is when the overall fundamental bias is bullish or bearish and we are not in range or accumulation or distribution, right? We're trending. When we are trending, that is when I take full advantage of my A setups. So in my group, traded indices and gold from August to November, profiting because we followed the fundamentals that impact indices and we use higher time frame structure and lower time frame structure in confluence in order to time and structure an entry. Now, what does this mean for you? You need to develop plays that you can trade effectively during each stage of the challenge. They have to have enough longevity. If you are scalping, scalp like the pros. They use several variables to identify beforehand that their symbols are likely to move strongly in a certain direction. Now, there are outliers like Tom Hogarth who trade mostly just price action, but there are several things you can add to your scalping setups to make scalp trades that are more likely to go in your direction when you have a catalyst. Catalyst will give you more momentum. So if you are day trading or swing trading, assess your strategy as well as determine what conditions give you the best edge and how to only trade when you have those conditions. A glimpse of what I told you can be seen in my 300K docu-series where I show how I passed a 300K challenge, my daily review process, and all of my trades from the MT5 and prop firm dashboard. If you want to see the 300K docu-series, click the video in the left-hand corner.